Today, we're going to be taking a look at three big names driving the AI revolution: Google, Microsoft, and Taiwan Semi. We'll be taking a look at recent news and articles related to Microsoft's recent dip. Is Google on the road to $300 a share? And why Taiwan Semi might be one of the most important companies in the world right now. I'm holding all three of these companies in my portfolio, so I'm definitely staying on top of what's going on with them. I am Lisa J. Stocks. If you're not already, subscribe, like, and hit that notification bell. Year to date, Microsoft is up 18.86%, but over the last month, they're down about 4%, down about 10% from their year high of $555.45, and about 7% down from their summer highs. Some investors are seeing this as a time to panic, but analysts like Evercore are calling this a buying opportunity. Why? Because Microsoft is more than just Word and Windows. Its cloud platform, Azure, is growing 30% year over year, and it's powering everything from small businesses to Fortune 500 companies. Microsoft is embedding AI everywhere: Copilot, Bing searches, its Azure AI services, and these AI integrations are generating billions in new revenue streams. So one risk associated with Microsoft stock is if their AI adoption slows or competitors like Google and Amazon Web Services outpace them. But Microsoft's cash, balance sheet, and consistent dividend growth are supporting factors that it is a safe long-time bet when it comes to AI. When it comes to Microsoft or any of my long-term holds, I'm able to zoom out and see the big picture. Sometimes we go through very rough times, like back in April, when everything in our portfolio had a significant pullback. I'm focused on the long term of when Microsoft reaches back to the $555, which we've already seen, and continues up towards price targets like $625, which analysts are giving it. And looking at a larger group of analysts over on Moomoo, 43 analysts rated an average price target of $622.93 and a high of $680. So from where we're at currently at about $500, that's a potential 20 to 25% upside of future growth potential once this stock is in the 600 to 625 range. And like I said, there are some analysts that are already giving it higher price targets than that. Now let's take a look at Taiwan Semi on the week or over the last 5 days. It's up 7.74%. Year to date, up 31.02%. Current stock price, $258.78. So what's going on with them today? We hear the name NVIDIA so much more often when we think about AI chips, but NVIDIA designs the chips, but Taiwan Semi actually makes them. In August, their sales surged as the company is investing $150 billion into new U.S. plants in Arizona. So this is huge, and it helps diversify chip manufacturing away from Taiwan, where geopolitical tensions with China remain a huge obstacle. So Taiwan Semi leads the world in advanced chip making, producing the 3nm and 2nm chips that power everything from iPhones to AI data centers. Without TSM, your AI apps wouldn't run. So when it comes to Taiwan Semi, analysts are also raising their price targets because they are at the center of the AI supply chain. So many major companies like Apple, NVIDIA, AMD, and Microsoft are relying on them. So this is another long-term hold for me. The growth has not been as fast as NVIDIA, but the demand is high for what Taiwan Semi provides. They hold a key component that's needed by so many of these companies, and that's why I decided to have this as one of my individual stocks that I have in my portfolio. I do invest heavily into ETFs, but for added growth, I add companies like this to hold for the long term. Last up, let's take a look at Google. Up over 19% on the month, currently $240.07. So investors have been celebrating because it seems that Google has avoided the worst case scenario of a potential divestiture related to Chrome in last week's antitrust ruling. So they won't have to break up the company and disrupt the structure that they've built. Analysts are projecting more room for this one to run, and their share price is up over 24% already this year. So Evercore and other analysts are calling for a $300 price target when it comes to Google, up from around 240 to 245. That's over a 25% potential upside when it comes to Google. So when it comes to Google, they are still number one when it comes to being a worldwide search engine. They own YouTube, which is a money-making machine with ad revenue continuing to grow and more premium subscriptions. Google Cloud comes in number 3 behind Amazon and Microsoft, but they are working to expand and their AI products could push them even higher. They've come out with the Gemini AI to compete with ChatGPT, and they're already integrating that into their workspace apps and other search features. With this result, some easing of their legal issues that they were having with the Department of Justice, a strong balance sheet, plenty of cash on hand, diverse revenue streams, all of these things are a good balance for the company. So if one thing slows down, like the ads, then cloud or AI might be there to pick up the slack. But the company seems on track to continue growing. They do have to focus on spending heavily when it comes to AI, but in the long term, with the advancements that they are making, this is a company that I will not be betting against. There are some concerns when it comes to this company, but they have businesses, Google Cloud, YouTube, Waymo, which I haven't even mentioned today, those driverless vehicles. They're staying competitive against ChatGPT. Overall, in the long term, it's tough to bet against this company with billions of users demanding what they provide every day. So what does this mean for my portfolio? Let me share what my positions are looking like so far. When it comes to Microsoft, I have 3.5 shares. I'm up 12.47%. So this is bringing steady, diversified tech to my portfolio. A safe, strong, reliable company that is staying relevant and progressing when it comes to AI. When it comes to Taiwan Semi, I have 15.45 shares and I'm up 33.53%. And as we discussed, it is a crucial piece to the entire industry. And Google, my growth stock, I have 24.8 shares. I'm up 83.07%. I have an average price of $131.21 when it comes to Google. So I've been putting in my work little by little over the last few years, and it's great to see that it's on its path to being $300 a share and thriving from this AI integration, as well as their ad revenue. So remember, you don't have to pick individual stocks if you're not ready for that. There are tech ETFs that give you exposure to the S&P 500 or even the total US stock market that will give you exposure to these companies. But for added growth potential, I incorporate some blue chip stocks like these into my portfolio. As always, I'm just here sharing my journey to build wealth, stay informed, and make sure that my money is on track to make more money. Do you have all 3 of these companies in your portfolio? If you had to choose one to add, which would it be? Drop me some comments. Let me know your thoughts. If you haven't already, make sure to give this video a thumbs up, subscribe, hit that notification bell, check out my referral links. Thanks for watching. Okay, bye.